morning, Steve in Chicago with the morning grain comments. Well, initially, grains were lower. All commodities were lower. I'm concerned about global economic growth pace. Yesterday, it was the opposite, with grains higher, stocks lower. Some people thought the managed funds had taken off a portion of their spread position, in which in 2024 they were long stocks and short commodities, especially the grain markets. It was a very profitable position, and I wouldn't rule out that they would maybe put that position back on if the Fed lower rates and U.S. has record crops and South America follows up with also big crops. Right now, we've got beans still on the November above $10 and down about a nickel. I think some people feel that the market could go maybe to the 10.50 area eventually post-harvest, and that's where they want farmers to sell cash. D's corn right now is unchanged, a pretty tight range of 2 cents, and it's unchanged at 4.09. And again, corn pretty much the same way. If we get a rally into the 4.25 area, that might be a good place to start selling cash. Although some people feel that we could see a post-harvest rally somewhere between 4.40 and 4.60. For both beans and corn, you've got potential record crop, even though August was one of the drier months. And the 10-day outlook is dry, with initial cool temperatures north and then warm temperatures elsewhere next week. Crop ratings yesterday, corn was unchanged, 65% good to excellent, while beans dropped 2 percentage points at 65% good to excellent, still rated well above last year. We also note that the market, when looking at corn export inspections, they wouldn't rule out a slight increase in final U.S. Corn exports. In the beans, you could actually see some people talking about maybe lowering the bean export number, but maybe raising crush equal amount to keep the carryouts where they're at. We're still wondering in the bean market how much China's going to take. It's dry in South America, but our weather forecasters look for normal rains to return to Brazil in the month of October. We also note that the wheat market, again, Russia, prices do not follow the higher world prices, so they continue to be aggressive seller of any wheat tender that might pop up. 70% of the U.S. spring wheat crop is harvested. 2% of the winter wheat crop is planted, with mostly dry conditions in the southern plains. So when you look at global wheat conditions, Canada's okay, Australia's okay except for Queensland, which needs rain. Argentina's dry, Europe's wet, and the Black Sea is dry. We also noted that Purdue University puts out an ag barometer every month. So for the month of August, it was down 13 points from the previous month. That's the lowest level since April, and down 15% from last year. And it's the lowest August since 2016. Farmers talk about depressed farm income as the main negative factor. The lower prices has offset the larger crop yields. So again, look for a choppy trade. We've got the USDA report coming up, and outside markets are still trying to struggle where to put $6 trillion that's currently in the mutual funds.